Bitcoin white paper came out, and well, the way we look at digital assets changed forever. That brings us to today, and people still have the same view. Is Bitcoin a scam or not? And this is why we are in an important crossroads. Is the price going to continue up as adoption continues to flow in, or for now, is the Bitcoin bull market on pause? Well, we're going to break down two parts of this video. The first part is going to be all about why October didn't deliver for us, what happened, and what can we learn to really set us up for, well, what could be coming in November. And, well, here's a sneak peek. It's pretty bullish. So watch this video all the way to the end, and don't forget, hit the like and subscribe button. Let's get into it. So, as we said, 17 years, pretty much to the day, it's actually yesterday, the Bitcoin white paper was released by none other than Satoshi Nakamoto. Now, if you've been in this space for a while, you'll know the importance and the significance of, well, now, what that white paper does mean. But that pales into insignificance when you just get people that want to see the price going up. And as much as I want to deep dive into the white paper, I'll leave a link so you guys can go and research it. But let's talk about what happened in October. Why didn't it deliver, as so many Octobers have? Bear in mind, this is the first red October now for 7 years in crypto history. So let's break down a couple of key things. Let's understand what happened. To summarize the month of October, $245 billion were wiped off the global cryptocurrency market, with Bitcoin down about 3.8% and things like Ethereum, XRP, some hitting double digits. So definitely not one for the record books. And the question then is why? Well, as you can see here on the chart, as per Crypto Quant, the sell-off wasn't irrational. There was actually a pretty important point. Weeks of speculative euphoria, momentum cooling, and institutional demand weakening basically means the macro was pretty much uncertain, all culminating in that massive Friday sell-off that, well, we still believe wasn't actually an organic sell-off and that was potentially manipulated by others in the space. And actually, you can see here by short-term sellers were panicking as well. 1700 BTC just hit exchanges as short-term hellers rushed to exit. They're selling at a loss. The absolute key thing to think about when we look at October, that so many irrational sellers happened. And if you believe that markets were deliberately pushed down, this supports it. Now, there is a word of caution here, and it's not often that I am a little bit bearish on certain things, but I think it's important that we have to understand the true picture if we want to go and be successful in November. One of the big things I've been talking about recently is repo debt. And interestingly enough, we actually just did get some of that. 29 billion from the Fed was pumped into the banking system over the course of the last 24 hours. In fact, the entire regional banking system is struggling for liquidity right now. If we were to get a mad rush on the banks, specifically regional banks in the US, this could and potentially give us the same problems that we saw with Silvergate and Citibank. So this is worth noting, and more importantly, very much worth keeping an eye on what's going on. So with all the bad news behind us to a degree, and we still have to wait to see the Fed cuts in December, that odd's now around 70%, what can we look forward to in November? Historically, November has been very bullish for us. However, when we've seen red months in October, November can be a struggle. But optimism needs to be with us. Why? We have the China deal. We have the tariff reciprocation. We also have the Fed cutting rates. Quantitative tightening is coming to an end. These are all bullish catalysts that send us into November with a way better entry than we got in October. Some of the other things to think about: retail investors are still buying stocks. They continue to buy US stocks 23 out of the last 27 weeks. And guess what else they're buying? ETF products. In fact, the last 220 days, we've seen net inflows into stock market ETFs. This is great news when you think about where retail is currently. And we know they've FOMO'd into gold a little bit, but this is important because once that capital rotates, then the crypto market is going to blow up. And look at this. Loads of people are going to tell you that M2 is on the rise, and actually that the dot-com bubble is exactly the same. And we're all going as freaking zero. The reality is that doesn't feel the same. In fact, they're very much a different scenario. We have obviously growing, expanding M2, which is important, but what we don't have at the minute is the push down from the dot-com bubble that we saw previous. This means, in theory, according to M2, which by the way just hit $22.12 trillion, means the markets have got more room to grow. That's before you even look at bull market indicators, and not one single one of them's hit. This tells us the market has more fuel to go. And when you look at things like the overall price of Bitcoin, you look at sentiment that sits behind it, and well, you look at kind of what's going on specifically with these ETF products. Yes, we have volatility right now, But volatility is generally created by market makers and people that want to shake others out of the market. We saw that on that Friday. Look at the charts. Go into the 1 hour. You can see significant pushes down as we grind our way up. Think about this. Have you ever looked at the charts in a day and you look optimistically at what's going on and we grind our way up? Green candle after green candle after green candle. Optimism starts to return to the market. People feel a little bit more bullish, and then what happens? We see the entire day's green candles wiped out in one single red candle. That is not organic selling. That is not profit taking. That is a systematic dumping of the market on purpose. Now, if you get into all of that, you have to be relatively optimistic about what's coming in November. Like we said, QE is here in December. We also have potentially further Fed rate cuts. The only thing, in my opinion, we've got to watch out for is that repo debt and the Fed bailing the banks. Now, this could all blow over as it's done in the past, and actually then liquidity gets injected, rates continue to come down, and risk assets will be the big winners. So, in summary, October, not great. Optimistic for November, but we must tread with an element of caution. Let me know what you guys think in the comments down below of all of that. Are you bullish on November? Do you think the best of the market's yet to come? Or are you in a world it's all going to zero and we missed the top? Let me know in the comments down below. As always, if you want to get alpha reports, new coin launches, as well as technical analysis and much more, don't forget to grab our channel membership. Click the join button down there. As always, we appreciate your time. Don't forget the like and subscribe button, and I'll see you soon. Bye-bye.